Scott and Stephanie, how you doing?
Fine, how are you?
Have you folks ever heard of A.O. Williams?
I don't think I have.
Okay, let me tell you a little bit about our company, Scott. A.O. Williams is the world's largest financial services organization. We're the world's largest producer of mutual funds. We're the world's largest producer of individual life insurance. And the reason A.O. Williams got to be so big and so successful is because we compete for the consumer's money. In other words, we don't sell policies and ask you to spend more money on top of more money. You know, we go into the consumer's home or the consumer's business and we show you how to cut cost, or we show you how to invest your money more wisely and get a bigger, percent of return. And we show the consumer something that banks and insurance companies and different savings institutions have found out a long time ago. There's a reason that they control a big percent of the wealth in our country today. And many people call it the time value of money. I happen to call it the magic of compound interest. It's amazing, Stephanie, if you will get a better return on your money. In other words, if you'll invest your money working for you, it's amazing what a few extra percent working for you, compounded over a period of years, means to your future. Let me give you an example. Let's say you had $1,000 and you invested this in Bank A and it was giving you an interest of, say, 5%. And you had another $1,000 and you went across the street to Bank B and they paid 10% on your investment. Well, your common sense says 10% is 2 times 5%, and so the bank that pays you 10% on your $1,000 investment would be twice as much when you wanted your money as the bank that paid 5%. But that's wrong, okay? And let me just give you an example. Let's say you put your $1,000 in Bank A at 5% and you left it there for 70 years and your money just compounded. You never made an additional investment. You just left it there and forgot about it. In 70 years at 5%, your investment would grow to $30,426. Now, in the other bank, though, you put the same identical amount of money, never put any more money in there. $1,000, one time only investment, but you got 10%, okay? Really 2 times more. Your money does not double. It grows to $780,000. See, that is amazing, okay? And this is, I say, something that banks and savings and loans and insurance companies found out many years ago. As an example, what we believe in is you've got to bypass the middleman, Scott. What's happening right now is you take your money and you invest it at banks, let's say at 6%, and savings and loans at 6%, and credit unions at 7%, and insurance companies at 1 to 4%. Over 80% of the American families that own life insurance, as an example, had their money invested in a savings account at 1%, or 2%. It's absolutely unbelievable. And what these people do is they really rent your money. They pay you 6% or 1% to use your money, and then they in turn invest it in things like credit cards, and charge the consumer out there 20% or 18% or 21% in home loans and things like that, okay? Right. And the average return to these financial services institution is 18%. So they pay you 1% or 5% or 7%, Stephanie, then they take your money and invest it, and then they wind up making 18% using your money. Wow. And what we try to do for you at A.O. Williams is we try to knock out these middlemen. We try to show you how to take your money and put it directly in an investment where you get the total return, where you can make this profit for yourself. Of course, the biggest villains I find as I go across the country is insurance companies. It's unbelievable what they've done to the consumer out there. Most insurance companies sell cash value life insurance. It's called whole life, universal. I got a lot of gimmick, kind of names on it. But basically what you do is you bundle your insurance and savings in one contract. You bundle them together, okay? And we believe in what we call buy term and invest the difference, where you separate your insurance and investments. And just look at the difference here, Scott. This is a typical whole life policy now, $100,000, where you've got cash values building up inside your contract. If you lived age 65, you would have $47,000. Well, if you took that same identical premium now, bought the same $100,000 life insurance policy from a life insurance company. See, we believe you ought to buy life insurance like you buy other kind of insurance, homeowners insurance, automobile insurance, health insurance. You buy the most protection possible for minimum dollars. Rule number 1 in buying life insurance is never, ever, nowhere, no time, no how invest with an insurance company. That's the world's biggest ripoff, in my opinion. So you buy life insurance like you buy other kind of insurance from an insurance company, and if you die, they're going to pay you the face amount of the policy, but you take the difference in the premium. Like as example, at age 30, this is $924 for this $100,000 whole life policy. Well, you could take that same $924 and buy term life insurance. Now, $100,000, I'll pay the same identical death benefit if you died to your family, okay, for $175, and that frees up $699 to go to work for you, not the insurance company, okay? And what I'm trying to show you right now is the time value of money, okay?
Okay.
So it's absolutely incredible, Stephanie, what a few percent interest would mean to you invested over a period of time, okay? And what we've got to do is knock out these banks and savings and loans and insurance companies. There's a reason for banks and savings and loans, okay? That's to deposit emergency money. You need to have 3 to 6 months, emergency money there, if you need it, okay? You need to have life insurance, okay? It's critical that you have that once you have a family, okay? But you need to buy the right kind, and that's low cost, inexpensive, term insurance, okay? And we can provide all that for you. But what I'm talking to you about today is you've got to make sure you take a portion of your money and you invest it for you, okay, where you get the return that banks and savings loans are getting on most people's money out there right now, okay? And we have a way where you can take just a little bit of money and you can have professional management, do that for you, Now, when I get to this point, most people stop me and they say, now, Art, look, all that sounds great, okay, but we're just scrimping by. We don't have any money to save or invest. Now, remember what I said a while ago. A.L. Williams became #1 in the largest industry in the world because we show you how to cut costs, because we show you how to get more investment return on your dollars. We're going to show you how to free up money so you can do this, okay? And it's amazing, Scott, what a huge amount of money goes through a family's account, during their working lifetime. As an example, if you and Stephanie, let's say, average from 25 to 65 as an average working lifetime, let's say you average $20,000 a year, you will earn in your average working lifetime over $800,000. See, people don't realize that, okay? So people got the money if they use it wisely, okay? If you earn, let's say, an average of $30,000 over 40 years, that's $1.2 million. If you earn $50,000, let's say combined family income average over 40 years, that's over $2 million. Well, what we've got to do, Stephanie, is take a portion of that money and make it work for you, okay? And not the banks, not the insurance company. Again, it's amazing, and I call it the magic of compound interest, okay? What a few percents will mean to you and your family, compounded over a period of years. Now, let's say you could save $100 a month. Now, by the way, Stephanie, can y'all save $100 a month right now?
Probably.
If we tried, we could.
$100 a month invested at 5% would be $725,000. If you take that same $100 a month now and you get 10%, okay, don't rent your money to these people, okay, but you invest it for yourself and get 10%, that's $9.9 million. Same, ain't that it's mind-boggling.
That's how much a month?
That's $100 a month invested at 10%, okay? That's almost $10 million now. That's the difference now in $10 million, and at 5%, $700,000. Now, if you get 2 more percent, Stephanie, that's $29 million. Isn't that something? 10 million is $10 million, but 10% is $10 million. At 12% is $29 million. Isn't that unbelievable?
Wow, it is.
Now look at this. Let's see now. Let's go through it again. Let's say you take $1,000. I'm talking about $1,000. I'm not talking about $1,000 a year. I'm talking about $1,000, Stephanie, one time only. You put $1,000 in here and never touch it again, okay? Bank A pays you 5%, okay? In 70 years, that's $30,000, okay? But let's say you're smart and we knock out those middlemen, okay? And you put this money to work for you and you get 10% on your money, then that $1,000 grows, same money, to $780,000. Now, let's say we can do a little bit better than that for you. And I think we can. Now that $1,000 would grow at 12% to $2.7 million, okay? Now, let me tell you, talk about the rule of 72. Now, another villain in all this to me is all these universities. You don't hear anything like this at Harvard and Yale. They get everything so complicated and sophisticated, that people think the average ordinary Joe out there can't understand the right kind of insurance to buy and how to make your money work for you. And that's dumb. I mean, what I'm talking about today is just very simple. It's like, mathematical problem. If you got 2 plus 2, there's one answer is 4, okay? And we're talking about just good old-fashioned common sense and horse sense, okay? Now, let's say you wanted to know what kind of percent interest you had to have, Scott, to make your money double, okay? all you have to do is divide the percent you can get on your money from an institution, okay? Divide that into 72. That's just simple, okay? Let's say you get 1%, like a lot of insurance companies pay you out there. If you divide 1% into 72, it takes 72 years for your money to double. You know what I'm saying? If you had $1,000 and you get 1% return, Stephanie, it takes 72 years for that to be worth $2,000. You know, you can get that in a lot of banks, okay? But if you can go out here and put your money to work for you, let's say at 12%, and there are a lot of good, sound, safe, conservative investments you can do that now. 12%, it only takes 6 years. Isn't that something?
To double the
To
investment.
double the investment, $1,000 of growth. So with these insurance companies, take 72 years. You go get a good mutual fund investment. It takes 6 years, okay? And another key now, let me talk to you again about it. The key is not, you don't have to have a huge amount of money to be worth a huge amount of money. The key is consistency, okay? You got to have the discipline and consistency to take a certain amount of money every month and commit it to a long-range investment program, okay, where you knock out the middleman, you invest the money for you, okay? Let's look at another example. Let's say you can save $100 a month now, compounded again over 70 years. At 1%, that would grow to $121,000. But at 12%, that would grow to $29 million. Isn't that unbelievable? That is absolutely mind-boggling. That's the reason, Scott, my friend, that you ought to go downtown Atlanta and you see all these skyscrapers, and on the name of it, on the top of it, you see C&S Bank, okay? Yeah. You see Prudential, okay? You see that rock floating down to River on TV, you know? Yeah. And it says, have a piece of the rock. Well, they get a piece of the consumer out there, okay? That just costs mega millions, okay, to float that rock down the TV, okay? Well, the consumer's paying for all that, okay? Isn't that unbelievable?
It is.
And Scott, another principle now, I just got through saying a while ago, it doesn't take a lot of money to be worth a lot of money. What you've got to do is have the discipline and the consistency, you know, of saving a little bit of money every month, okay, or every year, you know, and then if you can put more in there, you can, okay? And it's unbelievable. You knock out the middleman, make that money work for you, okay? Don't let them borrow your money. It's unbelievable, you know, the potential, you know, of your return down the road, okay? But the key is getting started, because time is the key, okay? If you've got 30 years or 40 years or 50 years or 70 years, okay, that gives you a better chance. And look at this example here. Let's go back from 25 to 65, a normal working lifetime of a person, okay? And say you were going to invest $100 a month. At age 25, you would have $979,000 at age 65. Now, Stephanie, in the United States now, in the richest country in the history of the world, 87% of our citizens last year retired flat broke. That's mind-boggling. See, there is an answer out there, Scott, but you've got to make your money work for you and knock out the middlemen, okay? Now, if you wait 1 year, though, that costs you $106,000. Your $100 a month is only worth $873,000. If you wait 5 years, your $100 a month investment at the same percentage interest, now 12%, would be worth $551,000, not $979,000. You lose almost $500,000 by waiting 5 years. So it's important that you get started right now. Isn't that exciting?
That is. It's
incredible.
incredible.
It truly is amazing, okay, what you can do by investing your money in an investment program that you own, that you control, that you're getting the maximum return over a period of years. Scott and Stephanie, let me ask you this. If I can do what I said I can do now, if I can give you, let's say, in life insurance, do y'all own any life insurance? Mm-hmm. Let's say, Stephanie, if I could give you the same protection you now have and cut your cost 30 to 70%, okay, your premium, or I could take the same dollars you're now spending and give you a great deal more value. You know, is that something you'd be interested in?
Sure, yeah.
Well, what I'd like to do tonight is pick up your policies, and I'll leave your receipt for them, okay? You know, your life insurance policies are, you know, not a legal document. I mean, this policy is filed with the insurance company, and so, for instance, if I lost it, which I'm not going to do, okay, or they burned up, or you lost them, okay, and if Scott passed away, Stephanie, you and the children would still get the benefit of that proceed, okay? Right. So there's no, you're not taking any chances here, you know? And as I said, I want to have the chance to compete for your business. You know, if I can't prove to you what I said is true, then I don't deserve your business. I find that 99% of the time, when people give me their policies, they really don't know what they had. They thought they did, okay? But I'm going to show you exactly what you've got. It's not going to cost you anything. I'm going to show you exactly what you have in your policies individually, and I'm going to put them all together, benefit by benefit, year by year, and then I'm going to compare it to what I can do with you with the world's largest individual life insurance company, okay? And I think we can do a job. Also, I'm going to get some information from you and see where you've got some of your money invested, And as I said, you need an emergency fund, you know, in your bank and savings and loan, but you need to take a portion of your investment dollars and not let them invest your money for a profit for them. We want all the profits to go for you, you know. So is that something you'd be interested in?
Yeah, I don't know why not. Sure.
I see so many people that they really want to invest, you know, and they understand that time is the key and they need to get started right now, you know, but they just feel like they're under so much pressure that they can't invest right now, you know. We have, I used to coach football, you know, for a living, and I did this part-time just for extra income for two and a half years. And me and my wife, we accumulated over $42,000, you know, just working every now and then, you know, making a sale every now and then, part-time. And it's something you really feel good about. It's not like selling soap and shoe polish and vitamin tablets, you know, and crap like that. You know, it's a profession. You got to have a license. But, and we don't go in and sell policies. We show people how to save money. And let me tell you what I'd like for y'all to think about doing, Stephanie. We have a meeting down at our office every Tuesday night. We bring some nice couples like yours in and show you what I think is the greatest part-time opportunity in the world. You think y'all might be free next Tuesday night where I could pick you up and we'll ride down and spend an hour and let you know a little bit more about our company, and this might be something you'll be interested in. Well, y'all are nice people, and I think it'd be fun to have you on our team. So let's do this now. Let me get your policies, and I'll ask you for a little bit more information. And next Tuesday night, I'm going to give you a call, put it on your calendar. I'm going to come by and pick you up. We're going to go to the opportunity meeting, and I will make an appointment with you following that, a night or two following that, to come back and show you what we can do and how much money we can save you. And I think you'll be excited.
We're looking forward to it.
Thank you.
Thank you.